What is up, everybody? Welcome back to another live reaction with Bitcoin and markets. My name is Ansel Linder, and today is the FOMC drop. So we're going to go over a few things here. What you're seeing on the screen is bitcoinandmarkets.com. Go there, sign up for the free weekly newsletter, support my content, yada, yada, yada. Okay, let's jump into the charts here real quick. We have the daily chart still holding on to that 50-day move average. I will share this with Telegram. So the FOMC is going to be dropping their decision here in a few minutes. I'm going to keep refreshing that page. We will get the live reaction going here. I'm pretty sure it's at 2 o'clock. It better not be at 2:30 because we will be here for a long time. Okay, let's take a look at the dollar. Down a little bit on the day. How about oil is just crashing once again into that zone where the administration promised that they would be refilling the Strategic Petroleum Reserve. Even now, what we see is they're actually taking the Strategic Petroleum Reserve stuff, or still drawing down the Strategic Petroleum Reserve. Okay, this is the 5-minute chart. I'm going to go to the 1-minute S&P 500 chart, and we'll toggle back and forth with that and the Bitcoin chart. Oh, I'm going to take those moving averages off too, because that's not very important. Okay, we're getting a little bit of a spike here into the pre-decision period. Let's refresh this page. How many minutes left do we have? About 3 minutes. All right, I'm going to go to this article just dropped recently on Zero Hedge. I'll share that with Telegram as well. So this is a premium content on Zero Hedge, but they always archive them. So this single sentence will define everything. Here's what the Fed will say today. While we previously did a lengthy preview of what might be expected in today's final rate hike and pause Fed meeting, due to the significance of today's meeting, we wanted to summarize the key points. Echoing what we said last night, this morning, Goldman trader Rick P. writes, a 25 basis point hike today seems like a foregone conclusion. The big debate will be the language in the statement. The market is hoping for a 25 basis point hike and one and done message. Most expect a dovish outcome. That the statement will alter language stating some additional policy firming may be appropriate. As an aside, the weak JOLTS data will support a Fed pause with step down in open jobs and notable increase in construction separations. Okay, so let's go to this tab and refresh. Still nothing. Let's go back. All right, so looks like they're going to, he wants, next, let's take a look at what the Fed's statement will look like in redlined format compared to the March FOMC. As a reminder, the Fed already discussed policy approaching a sufficiently restrictive level last month, language which this month will escalate to the point of pausing, which also means eliminating the language that, quote, additional policy firming may be appropriate. Here is how Barclays sees it. All right. Amazing. Drilling down some more on the prepared remarks, Bloomberg Market Live reporter Ven Ram writes that, quote, a single sentence of the Federal Reserve's policy statement will determine how the front-end treasuries react to the central bank's review on Wednesday. All right, let's go back to this tab and refresh. Still nothing. The variables that will drive two-year treasuries will be A, whether the Fed signals a pause after raising rates by 25 bips on Wednesday, and B, how it telegraphs its intent given that the month's review won't be accompanied by either a summary of economic projections or a dot plot. Broadly stated, the key part of the Fed statement could go one of 3 different ways, each with different implications for the front-end yields, yada, 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 hawkish outcome, neutral outcome. Okay, my thinking is there's always a chance that they will surprise the market. The Fed, there's always a chance there. And if they do raise it here, I will actually, when I click on the announcement, I'll share that with Telegram. But they also don't want to disappoint the market. So Let's go to the CME tool real quick. I'm going to share this tab, refresh one more time. Here we go. We got a statement. Let's jump in here, share this with Telegram. And here we go. The U.S. banking system is sound and resilient. Credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. The committee remains highly attentive to inflation risks. The committee seeks to achieve maximum employment and inflation at a rate of 2% over the longer run. In support of these goals, the committee decided to raise the target rate for the federal funds from to 5 to 5.25%. Okay, so they did raise 25 basis points. They did not surprise the market. Let's see what other language they have in here. The committee will closely monitor incoming information and assess the implications for monetary policy. In determining the extent to which additional policy firming may be appropriate to return inflation to a 2% target over time, the committee will take into account the cumulative tightening of monetary policy. So, firming may be appropriate. Was that the same language from this one? That's the same language as they had last month. Very, very interesting. The committee will take into account cumulative tightening policy, the lags, monetary policy takes effect, economic activity and inflation, and economic and financial developments. And it will continue its reducing its holdings, so QT. Okay, so nothing super crazy. Vanilla response from the Fed. Let's go take a look at stocks. Of course, this is the 1 minute chart once again, and we had some massive volatility. Usually the initial reaction is not the one that takes hold, but that is the reaction from the stock market. Again, the Fed raising rates, people believe is a fundamental of the market. However, I believe that the Fed raises, or the Fed follows the fundamentals. So they, the underlying strength or weakness of the economy is beyond the control of the Fed, just like all of these bank failures. They can't, all the different policy tools they have, all the different programs they have to watch the banks, all of this stuff they have out there, and yet they still can't stop the banks from failing because they are in control of the underlying fundamentals of the market. So we have the S&P 500 is dipping, but for the, let's see, going back to this morning, let's go to the daily chart. We can get a better understanding of exactly what's going on. There's nothing, it's still green on the day, folks. The S&P 500, even though they are raising by 25 basis points. Remember, one and done. Every time the Fed raises rates, that's one more closer to the end of raising of rates. And that's what the market is trying to price in. Okay, let's take a look at Bitcoin, how it's going up right now, actually. Let's see. So this is the 5 minute chart, and let me take this off the screen. Or sorry, this is the 1 minute chart. Copy and paste that to Telegram, where you guys are following me. Again, if you guys are watching on Twitter or YouTube, I am live streaming YouTube, Twitter, Twitch, and Telegram. The Telegram is the main base for all of my stuff. So that is at t.me/Bitcoin and markets. I usually post, 5 to 10 things a day and answer questions and go more in depth on a lot of things. Starting to post a little bit more on Twitter at Ansel Lindner, where I am live streaming this. So you guys can follow me there. And the Rumble, Bitcoin and markets on Rumble, trying to get my subscriber base up over there and start live streaming to Rumble, because FedWatch is doing great over on Rumble with Bitcoin Magazine, and hopefully Bitcoin and markets can do the same. So Bitcoin on the 1 minute chart here is not doing anything significant. We'll give that a couple more minutes. Again, if you're joining a little bit late, the Fed did raise by 25 basis points. Did not disappoint the market. However, much of the market, people are thinking it's going to be one and done here at the end. There was no significant signaling in the statement either. Economic activity expanded at a moderate pace in the first quarter, 1% GDP quarter. I think it was annualized, quarter over quarter, annualized, whatever. And that is what we saw for that. What else on GDP? One of the things I have been noticing recently is a lot of talk about, let's see if I can find that chart. One second. I'm going to see if I can pull up this chart. Search tour. He retweeted it this morning. Sorry, guys. Let me find this and I'll share this tab. So I've seen a version of this chart going around recently. This is bank failures, the size of the bank failures, stacked on top of each other. And you can see that they're trying to spread this fear that it's just like 2008, 2009, or even higher right now. One of the differences I've been pointing out, though, is the economy actually went into recession in 2007. So there's a few things that are different between now and then, or back then. Also, the Fed knows how to fight this type of battle. People always talk about warfare. You always fight the last war. These economists are always fighting the last recession. And so the recession this time is not going to be exactly like the Great Financial Crisis, okay? It's going to be something different. Right now, we can see what they're doing is a little bit different than back then. It took them a while to figure out Bear Stearns and Lehman Brothers, but this time they're proactively gobbling up these banks, right? Silicon Valley, Signature, First Republic got a major government-sponsored bailout. So is this going to be the same as 2008, 2009? I don't think so. We're still not in economic recession, textbook economic recession. I think the high CPI falling is going to drastically change a lot of the numbers. I've showed my chart in the past of the race between declining nominal GDP and declining inflation component of real GDP. So right now we still have positive GDP. Whether that dips negative for the next couple quarters, we'll have to see. But it not necessarily going to be a massive recession. However, when we fall from 10% nominal GDP to 0% nominal GDP, we're losing 10%, right? Or more. What would that be? Actually, it'd be less than 10%, but we're losing slightly less than 10% of GDP, which feels very bad. But at the same time, on a real scale, if you take price increases away, it's still positive. And that's going to fool a lot of the economic indicators and economic calculations. And on the backside, we have this banking crisis that is the plumbing of the system, that is liquidity within the plumbing of the system. More similar today. I mean, it's more dramatic so far than the repo rumble in 2019, but it's kind of similar where they're able to contain it to the plumbing of the system, the liquidity in the plumbing of the system. Okay. So guys, just to recap, what we did today was we took a look at the FOMC statement. They raised by 25 basis points. I'll have more for you tomorrow on FedWatch, 12:30 Eastern with Bitcoin Magazine's YouTube channel. Let's take a look at the charts. 1 minute chart here of Bitcoin. Once again, nothing significant. Still about 28,500 up on the day. S&P 500 was up on the day. Still green on the day for the S&P 500. Oil is ticking up slightly. No biggie. Let's take a look at some short-term interest rates. So the 10-year, this is a long-term one, but the 10-year, 3.38. All right. Going up slightly here. We'll see. It is below its happy place right now. This is the 1 minute. Let's go to the 1 hour. So this is the 4-week on the 1 hour chart, and really nothing at all to report here. It did not respond whatsoever to the FOMC statement. Let's take a look at the 3-month. Nothing significant to report. And we'll take a look at the 2-year. It has been dipping recently, but again, nothing significant to report. So the Fed did not disappoint the market, and that's what we see out there. The economy is slowing dramatically, but so is CPI. Will we enter a textbook recession? We don't know yet. And if we do, will it be mild or a hard landing? Most fear mongers out there are pushing a very, very hard landing, harder than the Great Financial Crisis. But if it is similar to the Great Financial Crisis, the Fed has tools now to head that off for the most part. Once again, extending the deflationary pressure. It's not an inflationary bailout, it's a deflationary bailout. And continued search for monetary alternatives. Where does that take us into? That takes us into these countries talking about using other currencies in bilateral trade. It talks about a BRICS currency or the yuan taking over world reserve currency status, which is kind of a joke. But all of this is just a search for monetary value in a system where the monetary value is in short supply relative to debt. So Bitcoin wins in that regard, especially when it expands in value. It's like an expanding balloon of monetary value that can be used by the world. And slowly but surely, they will figure it out. All right, guys, that's going to do it for me today. I did do a live stream earlier today, so you can check that out on YouTube and Twitter and my timeline and all that. Appreciate everyone who supports over on bitcoinandmarkets.com. That's going to be it, guys. Have a good rest of your day. Bye.